Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So in the nearest few months I suppose that the gold market should become the most interesting of the market as for trading, as for possible changes that should come among all other markets, because it should, well, clearly reflect the difficult and situation that we have currently, and the major turning points that we will get in the global economy and geopolitics, so should get the reflection in the gold market as well. So in today's weekly report, we discussed and make the forecast on the next Fed policy, and also bring the analysis of the changes of the Fed policy in the future and how it should impact on the gold market. Well, we think that this is really big changes, despite some gross domestic product release, recent comments. It's more interesting what Fed is doing right now and what they intend to do. And we think that Fed capitulates and defeated by inflation. They will not struggle it. And the United States government and the Fed turning to the new quantitative easing scenario. Maybe they will do it in secret. Maybe they will not be publicly official, but take a look what Joe Biden announced, the two programs on the semiconductor, on an energy project that together will cost to the taxpayers approximately for $1 trillion, slightly lower. What this program, if not the quantitative easing? Fed totally ignores the quantitative tightening promises and bought nothing from the market actually. So IMF has released a new report that confirms things that we said a few weeks ago. Recall our discussion of the possible breaking of the European Union to the few currency zones, currency sectors. So, and IMF in a recent report, I have put the link in our report, weekly report, tells the same. So they see the geopolitical risks of the fragmentation of the world in the new currency zones. So it doesn't matter what the zones will be, but if existed reserve currencies losing the value and losing the areas, it means that in the current circumstances of this restructuring, the gold should get a special feature that it has historically, and this is saving of the value. So all the stuff together, so we talked about this in detail in the report, so you could read. It's really not really very long today, but a lot of interesting stuff there stands. We suggest that in the current circumstances, in the nearest time, we should get the visuality of some prosperity on the markets. Stock market probably will stop falling. Interest rates stop climbing. Actually, they already does. So we take a look at what has happened last week. Surprisingly, we get the recession, we get the 10% inflation, and we have dropping of the interest rates. How it might be possible? So, and that trend probably will continue. So Fed and government will use the new pumping of the money, printing of the money, to control the interest rates at the existing levels, to not let them to rise more, and to put liquidity in the stock market, and before the elections create the visuality, the image of the rising stock market, of prosperity, improving of the household's wealth, and so on. But there is only one problem, is that on the background of that happiness, you will see the rising inflation. Inflation will be 12, 13, 14, and so on. It's just because when you're pumping the money into the economy and the inflation is already above the 10%, it can't stop. It will grow further. And despite that, you will see some positive trends and stable rates on the markets, the people will lose the ability to consume is the consumer power of the money will be deteriorating, and very soon it will become visible. So that's what we get. So it means that Fed currently is postponing the crush, and all these factors together, when the interest rates will start dropping more in the negative territory, with a slowdown on the economy and denying of the rate hiking, this creates a really good background for the gold market growth. I would not even talk about the geopolitical problems. So that makes us think that maybe we could not see the 16 even area. We could suspect that market could flirt around 1660, 1680 for some time because it has bearish momentum. We need to struggle with it. But at the same time, we think that the break-even point on the gold market could come earlier than we thought. So in the shorter term, right now, as you can see, the performance on Friday was not very, very significant. So actually we're dealing with the same scenario that we have. The only thing that I would like to add here is that with this new information on the back, we could suggest and recognize possible appearing of the head and shoulders here on the daily chart. So it might be left shoulder, head, and then it might be right shoulder. If we are correct in our suggestion as fundamental as technically, this big pattern could become the background for the major reversal on the monthly chart and the continuation of the major bullish trend on the gold that we had before the top right there. So this retracement will be over with the appearing of these head and shoulders, and market could start keep going higher. That's we should keep in mind and watching for that. Meantime, on the next week, we're still watching for this resistance around 18 even. It's a good barrier. We could see here this very bad confidence area, and we're aimed on the reaching of this level. So on the 4-hour time frame chart, we're dealing with the same head and shoulders. Market's coming to the OP. Once it will be reached, we will be watching for a pullback. So actually, we mostly discussed this on Friday. First level is 1748. 1735 confidence looks really very attractive because it's neckline and it's confidence area. So if market will show retracement to these levels, it will be just perfect. And we're watching for possible taking the long position based on the same pattern with the next targets around XOP 1806, which is perfectly agrees with the daily resistance level. That's our short-term plan. So let's see, guys, how it will turn. But it seems that we stand at the eve of the big changes on the global economy in general and on the gold market in particular.